Welcome to the AACFB's 2022 Meet the Funder webinar series. My name is Monica Harper, and I'm the Executive Director of the AACFB, and I'll be your host. Our presenters today are Stuart Warba and Robert James from Gulf Coast Business Credit. Gulf Coast Business Credit is both a funding source member and a gold sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I introduce Stuart and Robert, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they should be answered by the end of the webinar. Please reserve the chat box for communication between attendees. The entire webinar should take no more than 30 to 45 minutes. For those of you who'd like to review this webinar at a later date, it will be posted on the 2022 Meet the Funder page of the website and it will be emailed out to the AACFB membership. At this time, I'd like to turn it over to Stuart and Robert. It is all yours.
Hello, everybody. This is Rob. I'm out of the Denver office. We appreciate everybody hopping on this webinar today. Hopefully it's informative and, you get something out of it. And obviously we hope to partner up with you all at the end of the day. And if you have any questions, I think we're going to do a Q&A at the end. I'll start the presentation here, but on the first slide, you've seen over and over and over again. I think that's going to be the key to today's webinar. Obviously, it's about residuals and the income you can make, but we'll get to that here shortly. The next slide is just kind of the agenda today. We want you to learn a little bit about, obviously Gulf Coast, the history of our bank and our factoring division. This is very important to us. We want you to know that obviously you're partnering up with a well-known factoring company that is bank owned, and that's very important to a lot of our clients that we fund, and hopefully that's important to you guys as well when you think about who you want to refer your deals to. Hopefully we're at the top of your mind and we can earn your business. So we'll be talking about obviously the history, Gulf Coast, and the solutions that we can offer your clients. The type of industries that we serve. I think there was 8 or 9 on there. Obviously, we can look at many different industries, and Stu's been here 14 years. We'll be able to tell you a lot about that. But, as long as the invoice is good and the debtor's good at the end of the day, we can take a solid look at that and see if it's factorable. Here it is, the residual income, the over and over and over again, that benefits you guys as brokers. Just some tips and tips of how you guys can earn more business. Stu's, like I said, Stu's been here 14 years. He can give you a lot of good insight on that, and just the benefits that Gulf Coast can do for your clients. And then the last page, you can get a hold of either one of us. So a little bit about Gulf Coast here. I'm going to read off the paper since I got it. We are a division of Gulf Coast Bank and Trust. That should make your clients feel well that they're dealing with the FDIC secured, funding source. A lot of them are private out there, so this should give them some assurance that they're dealing with a great company. We are one of the top, obviously, working capital finance providers in the country. We have over 3,000 clients in 48 states, so we're well known across the country. We do a lot of business. And Monica, as you said earlier, we are a gold sponsor of the conference, and many of you stopped by and visited with Stu and I at the conference. We appreciate that. We look forward to seeing everybody each year. So thanks for stopping by and visiting with us. Next slide. Just a little bit of history about the bank. It was originally American Savings Bank in 1883. So as you can see, the bank's been around over 140 years. In 1990, our president, even now, Guy Williams, and a group of investors took that over. Obviously, got it to Gulf Coast Bank and Trust. Like I said, we are FDIC insured bank with $3 billion in assets. And our factoring division, obviously, since 2000, 22 years of factoring. So right there should let you know that you're going to be dealing with good people, a good factoring company, bank owned, and it should just make you feel good that you're, partnering up with Gulf Coast. Next slide. Okay, a little bit about the types of, funding things that we do. Obviously, the main thing we focus on, and we talked about, at the conference when everybody showed up at the booth, is obviously accounts receivable factoring. I don't want to read this verbatim. You can take a look at it, but, obviously everybody knows the main reason people need to factor, or business owner needs to factor their debtors. They're paying them in 60, 70, 80 days. They can't afford to wait that long. They have bills themselves to pay, payroll, trying to bid on bigger jobs, trying to add more equipment. So a lot of them, obviously they turn towards factoring. Second one is asset-based lending. Obviously this is based off receivables, inventory, equipment. If the clients have some real estate, we can look at asset-based lending, and as you see there, $500,000 to up to $7 million we can do in asset-based lending. Next slide, please. Ledgered line of credit. To be honest with you, me personally, and Stu, you can hit on this one. A ledgered line of credit, I don't see a lot of them, to be honest with you. I may do 1 out of 100 deals, to be honest, but this is a client that may, have hundreds of invoices. They may do 50 to 100 invoices a day. They don't have great paperwork and so forth, like a normal, sometimes a good factoring client would have. So we can offer them a ledgered line of credit, and it's just a borrowing based on their overall pool of invoices that they do have. The industry partners, we do work with some industry partners. Obviously if the equipment financing doesn't fit in our wheelhouse, we will look outside to some of the partners that we've used over the years. Same thing with purchase order financing. We have some great partners that we do use. A lot of you may know who they are. And if you have any questions on that, we can get, what I'm saying is don't turn a deal down because we're saying we can't do that. We have a home for it. We'll put you involved and put you in touch with that partner as well. So on any of these deals, whether you think it's, a purchase order, equipment, inventory, real estate deal, a factoring line, let us look at the deal first. We never want to turn something down without at least talking to you. So, just give us a little background, give us a call, shoot Stu or I an email, we'll be able to walk you through it. I just tell my referral sources a lot, just don't turn something down without talking to me, because you never know. We are a bank, we are resourceful. We do make decisions in-house. So there's a lot of different things we can do with some of these different types of funding issues that we have out there. Next slide. Stu, you want to take over?
Sorry, wrong button. The industries that we serve, I would say probably some of the largest one would be probably the transportation and the staffing industries. And the main reason why that is because both of those industries typically have little to no assets, but can do large amounts of volume in a given week or month or annual basis. Because of where we're located, it being on the Gulf Coast, we do a lot of oil and gas. We are headquartered in New Orleans, and we do have offices all throughout Texas, Denver. So we are positioned in places that oil and gas is prevalent. I'm personally out of Atlanta, Georgia. And as Rob said, I've been here 14 years. So I don't see all that much oil and gas unless it comes from somebody like yourself that's a broker that's seeing it. Service providers, manufacturers. Again, anybody that really has a good, solid invoice with a good, solid customer, we are going to be interested in. There are certain criteria that go into that as it relates to whether on the PO or if there's a contract involved, depending upon the payment terms. But pretty much as long as it's a verifiable invoice on something that's either been delivered or completed, and it's within our payment terms or flexibility, I should say, we're going to go ahead and look forward to doing it. Now, government contractors is a little bit different niche. We certainly can do that. It's just on that, you have to understand that there's different paperwork associated with it. So it's not as easy as saying, hey, I've got an invoice. I'm working for the government, or I'm working for a state government, or I'm working for a local government. A lot of that's got to become, can you get an assignment of claims? What's the status of it? Is it contract billing? Is it progress billing? So on and so forth. Then we've got wholesalers and then technology. Now, the one thing I will touch base on here is, and Rob has mentioned it a couple times, is that we are part of an FDIC insured bank. And with that being said, we also own several other accounts receivable / ABL finance companies around the country that run underneath of an independent flag. So like our transportation deals, 99% of them are done out of our Phoenix office. Our oil and gas deals, we've got them typically out of our Texas office. Our government contracting deals, they're out of our Florida office. Our construction deals or progress pay deals, they're done out of our Orlando office. Our ABL deals are done out of our Minnesota office. But the main thing to take away from this is that Rob and I are going to be your main points of contact, and we will find a spot internally as to where it may go. And I'm only bringing this up to you because if it goes to a different office, I don't want you to think, oh, we're brokering it. We are not brokering it. We are not brokers. Rob, Rashinda on this call, we are bank employees. We are gulfbank.com. That's our email domain. So we are not double brokering it or taking it from you to try to get a commission. We're just putting it with a sister company of ours that's better suited to do it. So example, I go back to the government contractors. That's very, very specific. You have to know what you're doing. So that's why we place it out of our office in Tampa. That's all they do. So you're not going to get somebody that has no idea what it is, that's going to frustrate your customer and frustrate you by saying, these guys have no idea what they're doing. That office, that's all they do. All of our government stuff goes there. Same thing with transportation. It's out of our Phoenix office. That office, that's all they do. So they're going to know what a bill of lading is. They're going to know what a rate confirmation is. They're going to know what a broker is. I mean, they're going to know all of that. There's going to be no issues. So I just wanted to bring that up for you, just to kind of explain it, because I know there's quite a bit of industries there, and specializing in one or two is, typically what most brokers do. They say, I've got a niche with this, or I've got a niche with that. So that's kind of why I wanted to bring it up. Rashinda?
And there's no lag time in that, like Stu said. I mean, if you send Stu a deal like that, it's not going to take days to get it over to one of those sources that can do it for you. I mean, it's immediately that it'll get over there.
Yeah, I mean, and again, so if you bring us a construction deal, we're going to do a prelim look at it. If we can fit it in our bucket, we're going to do it. If not, we send it to that office within hours. It's not a matter of we're trying to strangle it to try to fit it into, a square peg into a round hole. It's a matter of saying, hey, this doesn't fit this. We're sending it to our construction group. So that's kind of why I wanted to bring that up. The best part about accounts receivable or factoring type of deals is that it's a residual monthly commission, and it pays for the life of the deal. And I think one of the biggest challenges or hurdles that we have in dealing with commercial loan brokers is that the majority, or I should say a vast majority, got into the industry when MCAs were huge. And MCAs were big home runs. You funded a deal, and you can get 50,000 commission, 40,000 commission off of one deal. You're not going to get that in factoring. And I'm just going to be upfront and honest with you. That's not what we do. But what we're going to do is we're going to give you residual income for the life of the deal. So as Rob said, I've been here 14 years. I've got clients that have been with me 11 of those 14 years. I've got brokers that have been getting paid for 8 or 9 years that they've been with me on the same deal. And the best part about it is you're just going to your mailbox or you go into your bank account once a month. You're just getting a commission report and the money's being deposited. You have no touch point with the client. There's no upkeep. There's no maintenance. We do all of that for you, and you just continue to get paid. So when we speak with people and we say, okay, this deal could pay off $200 a month. And I see brokers roll their eyes and they're like, oh, why am I wasting my time? Okay, well, if you add those up and you do 10 of them, now you're at $2,000 a month. If you do 20 of them, you're $4,000 a month. Over the course of a year, you're at $50,000 in commissions and you're not doing anything. You know, it's a no-brainer, and it just continues to grow. And if that company grows, that 200 could go to 300, that 300 could go to 400. So that's kind of how you have to look at this. And we're not saying to go ahead and just to focus and say, this is exactly what I'm going to do going forward. What Rob and I are here to do is to say to you, add this to your existing base of what you're already out there selling. And if you can pick up 1 or 2 a month, it's a bonus. It's just, it's easy, free money. And I hate that term easy, free, but it really is. If you just speak to a staffing company and and you can save them money on their factoring while you're putting an MCA in place, or while you're putting an SBA loan in place, why would you not take the residual on top of what you were already there to get? So that's kind of why, you know, we think it's important to get with brokers, because it really is. You guys are speaking to these businesses. It's a great opportunity for you. As I said, the relationship, we're looking to solve cash flow problems, and we're looking for long-term. We're not looking for, I would say my average customer's probably been with me for, I would say my average is probably 6 to 7 years. If you take my entire portfolio and average it out, which again, that's, you know, that's 100 checks on those existing deals that just continue to come in every single month. And that's why we are here doing what we do. We do all the legwork. All you need to do, and I want to be, and I should break this down a little bit better on the broker program. We deal with brokers that oftentimes they just want to go ahead and turn and burn and flip it. Rob and I have no problems working with that. And then we also deal with brokers that have a relationship with the client, which is great, and they want to be there every step of the way. Rob and I can work with either one of those programs. We're not, if you say, Stuart, spoke to this guy, met him at a bar, whatever it may be, his name is Steve, and he runs a trucking company, send me the name and number, I'll let you know if it pans out. If you want to go ahead and collect our package and send it to us, go ahead and do it. For us, it doesn't make a difference for us either way. Rashenda? Obviously, they can't click on it. So with us, tips for closing more deals, quality of the accounts receivable, quality of the paper, the invoice documentation, and the one key thing is we will always need a first position on the AR. We do not need a first on the buildings, trucks, anything. I just need a first on AR. Less important for us is we don't really care about cash flow. We don't really look at covenants or we don't look at financial ratios. We can deal with startups, so I'm not concerned about an operating history. Individual credit. I mean, I've done 400 to high 400 to low 500 credit scores. Again, we're not chasing those deals, so don't think that we are, but we can do them. We also have no issues if they have a single debtor deal. If a guy's got one contract that's doing $1 million a month with the existing company, and that company can go ahead and substantiate paying that, we will certainly look at it, whereas a normal bank won't. I would say from factoring clients to avoid is true construction, which typically is like a paid when paid. So you've got you've got a general on the top, and then you've got a sub underneath, and the sub basically is waiting to get paid. Those are kind of tough. But as far as the construction field, we have a whole division that does it. So we can do construction type deals. And then the other one that's really a non-starter is medical insurance, Medicare, Medicaid, and that's just because they discount it so much. So they'll bill for $100,000 and they'll get paid $60,000 as per the contract. You just can't factor that, because if you advance 70%, you're already upside down. As far as our advance rates, we can go anywhere from 80% up to 100% financing on trucks, which most of our competition doesn't go that high. And our rates can go anywhere from, 0.5 up to 2%, 2.5%. We will structure the deal that where it makes sense for everybody. We're not going to go ahead and lose a deal over price if it's a good deal. If it's a crap deal, I'm not going to get beat up over price. But if it's a quality deal, it's almost bankable. But for whatever reason, they just can't get in, maybe limited operating history. They're not making money as of yet. In that scenario, we're going to go ahead and try to find a way to make that deal work. So.
Can I just add something in here?
Go ahead.
On that last screen again, Rashenda, the less important stuff there. Now, the info in there is really important to a normal bank. So I just wanted to say, as you're dealing with, many clients and talking to a lot of people out there, and even I do it, and I know Stu does it, he taught me this. just because you don't think they need money, they may say, sir, ma'am, I have a line of credit with the bank. That doesn't mean they really don't need money. I mean, that less important stuff right there that you see, banks are really counting on them, the client to have all that in there. And if they don't, they're going to cut their line of credit. A lot of these business owners are growing, so they're going to need more money, where obviously if they can't provide that good stuff for the bank's going to turn them down. So that's, you can lead them into factoring that way as well, saying, look, you got some great receivables there. Why don't you leverage that? Try to get rid of the line of credit through the bank, and we can pay the bank off as well, with the receivables if they have a $200,000 line of credit, for example, and then we can get them factoring. So just keep that in mind as you're talking to people that are with, banks and have lines of credit and things like that.
All right, Ro. I think we've kind of touched on this throughout the presentation, so I don't know if we're going to go typically line by line, but I mean, the benefits of us is, and we're going to always hit on it, is we're an FDIC insured bank. We use our funds. Our credit decisions are made in-house. It's not a third party that's got to review our files. It's our money to make the decision if we want to send it out. So, with that being said, we are held to a much higher standard because we are bank employees. So it's not a matter of, if we annoy you or your customer, you can go back and file something with the Better Business Bureau and we write black, that's not true. He was mean. I mean, we're held to a much higher standard than that, and you have to understand the bank came first, and the bank will always be first. So there's a priority in that, and the integrity that goes along with it. I think as it relates to this slide, that pretty much covers it. Unless, Rob, you've got something else you want to add to that, but I think that's really what you got to focus on. And there's our 3 mugshots.
And just FYI, I know Stu and I both work on the weekend. So if you got a deal that needs some really important attention over the weekend, don't hesitate to try to get a hold of one of us, because we will pick up the phone. I know a lot of funding sources don't. Rashinda can attest to this. We do pick up the phone on the weekend. So if you need us, give us a holler or shoot us an email. We'll get back to you for sure.
And then I would say, now, if you want to open it up to questions, or I see there's 2 questions in there. But I don't know, Monica, do they have the ability to verbalize them, or do we read them, or what? How does that work?
I can read them off to you. And just as a reminder for anybody who has questions, please click on the Q&A box and type in your questions, and we'll get them answered. The first
question number 2, you don't even need to read, because we will eventually have additional BDOs in Texas, because the guy that wrote that works for us, and he's not going to be here much longer. Jeremy. So anyway, no, Jeremy's on us. He's a BDO out of Texas. He's a great guy. So go ahead.
Good deal. Is factoring and MCA your main business, or do you offer market rate, actual business loans, equipment financing, etc.?
I will take the first part of this, and I'm going to be very, very clear. We don't do MCA loans. We will not even dabble in it. We are nothing like an MCA loan. We just do, I said we just do factoring, but out of that first part of that question, we just do factoring. We don't do anything with MCAs. In fact, we typically don't like to really even work with people that are stacking MCAs on, just because of the constraint that they put on the business, really without focusing on the business, more so just looking at how much they can make. And I'll take the second half and go over to Rob.
And just hitting on that MCA, I actually had a guy call me today. He's like, Rob, you won't factor me. I said, well, you got 3, you have 3 or 4 MCA liens. He's like, well, I missed 2 payments and they ended up doing that to me. And that's the thing with MCAs. If they miss a couple of payments, they're immediately going to put that UCC lien on them. They're going to come try to factor with us, and we typically can't do it. So just keep that in mind, as you see MCA deals. As far as the offer market rate, different types of loans, we look at a lot of this stuff. We really like to see a factoring client on board with us. We can see kind of the financials coming in, the types of money they're doing month after, every single month. So it makes it a little easier. But again, if there's a certain equipment financing that this guy needs or type of business loan, give us a call. We'll see what we can do. Obviously, factoring is our main thing, but we will take a look at that. So just let us know what it is.
Great. It looks like we have hours ready to sign up. So that's great.
Albert, Stu's going to be calling you, or shoot him an email. We'll get you that broker agreement immediately.
There you go. I don't see any other questions. It looks like you guys did a good job going over everything, and I'm sure if anybody comes up with a question later, you'd be happy to answer that offline. So since there's no more questions, we'll be closing out the webinar. Big thanks to all.
Monica, let me just ask one question because I just looked and I'm finally figuring out how to use this. Out of the 11 attendees that are currently on, if we were to ask them a question, would they have the ability to like raise their hand or say me? Because my question would be, out of the 11 people that have decided to join us, how many of you guys either currently offer or do or pursue factoring type of deals, and how many of you had no idea what it was? I guess I would just be interested to know from my own knowledge. And if it doesn't work in this forum, I understand, but I just think that would be interesting to know.
We've got some raised hands. Hang on one second. John, you can speak if you want to unmute yourself. Or I don't know if they're raising their hands because they do factoring or because they want to talk.
I'm just new. I just wanted to just join in to kind of get an idea of the process of factoring. I've been reading a little bit about it, and I got the invitation. So how do you approach people, business, the company on the prospect to factor their A&Rs?
I think the best way to answer that question is the best way to answer that question is what type of industries are you currently pursuing? If you say, okay, I want to focus on factoring deals, I would highly recommend calling trucking and staffing and manufacturing. If your answer is it's a crapshoot and you're doing restaurant deals and you're doing funeral homes and you're doing, bagel stores and things of that nature, factoring doesn't even lend into that industry or those industries. So you're really not going to be able to get into that. But if you make a commitment and say, okay, companies that have goods or services or products that they're delivering and they're getting an invoice and they've got to wait 30 or 60 days, any business that does that would be an opportunity for factoring.
And John, and I think most people, honestly, when they get into this industry, and I mean, Stu, we talk to a lot of them at the show, every show we do, the main thing they usually typically focus on and tell us, we ask that question, what are you guys after? What are you pursuing? And Stu, what do most of them say? Trucking. Because they get on the FMCSA list. There's, hundreds of thousands of them. There's thousands of new ones daily. It's just who can get to them first to see if they're interested in factoring. So yeah, I would say the trucking is, the main one to hit if you're really going to go into it.
What about the oil industry?
Yeah, the oil industry is a good one, but it's mainly the service providers within the oil industry. As far as like, will we finance guys that sell oil to somebody else? No. But I mean, if you've got welders, roustabouts, staffing companies that service it, offshore boats, supply boats, I mean, I can keep going on this. I mean, there are frac tank cleaning companies, there's fracking companies, all of that lends into factoring because there's a longer wait time to get paid. So, I mean, but as far as like, I get a phone call probably once a month. I got a guy that's going to sell oil to Valero for X amount, millions of dollars. We're not going to touch that. But anything that goes into those, I mean, rig movers, crane companies, those are all companies that are a great client for factoring.
So your bread and butter is the staffing and transportation.
I would say that staffing, transportation, oil and gas, and the oil and gas, and I don't know if you were on or not, the oil and gas primarily for us is because we're headquartered in New Orleans. And then we have offices all throughout Texas. So if we were headquartered in Oregon or New Hampshire, we probably wouldn't have such a strong appetite for the oil and gas, but we are one of the companies that does have a strong appetite. It's just because where we're located and the bankers and the people that we work with understand oil and gas.
Sure.
Whereas, like I said, you can go to other factoring companies that, you know, that you bring up oil and gas, they don't want to touch it. And you can go to other factoring companies, you bring up trucking, and they don't want to touch it. And I've got companies that send me their trucking deals because they don't understand trucking.
Sure.
Great. Thank you, John. Charlie has your hand up. Charlie, if you want to unmute, you can speak.
Hi, everybody. Thank you for the information. Great, very informative. Thank you. One of the industries you said to avoid was medical insurance, medical/insurance. Is that medical staffing that you're saying to avoid?
No, that would be, I guess, because we get these all the time. That would be a chiropractor. You know, hey, I got a client that's a chiropractor. He's got 4 million in AR. Well, he may have 4 million in AR because that's what he billed, but in reality, that's going to be $600,000. So that's what we're talking about: Medicare, Medicaid, people that are billing insurance companies. As far as medical staffing, we'll do that all day long. In fact, I turned 2 of them in yesterday.
Okay. How about the government contracts? If it's a single contract with the Department of Defense, is that something that you'd look at?
We'll do all government contracts. I mean,
Okay.
I've got a program that we did with the state of Arizona. It's for in-home care providers that bills the state on a monthly basis. I've got a similar program set up with the state of Indiana. Again, they're contracting, they're single debtor deal only with the state. They bill once a month for services to in-home. I've got other contracts that are non-emergency medical transport. So they're working with local counties. They're taking the elderly, they're taking people that can't necessarily drive, handicapped, so on and so forth, to various doctor's appointments or grocery stores or the library or wherever. And then they're billing for, you know, $15 an hour or, you know, whatever it may be.
Okay, thank you. I'll be reaching out. Appreciate it.
Yeah, thank you.
Okay. Then we have Nima. You can unmute.
Hey, guys.
Oops.
Hello?
Hey, can you hear me?
Yeah.
Hey guys, thank you so much for taking the time. I heard earlier you guys were talking about how to identify key things in order to identify a good client for a factoring company, for factoring services. What would you recommend as being like the top 3 things that you need to keep your eye out for? And if you already addressed this question, my apologies, I got distracted a little earlier.
Top 2, maybe somebody who's talking to you saying, I need working capital immediately. You know, my debtors, my clients, customers are not paying us soon enough. Like Stu said, in the oil and gas, it can go 60 days, you know, and farther out. So those are the key ones I look for. Somebody says, I need extra money for payroll, or I'm trying to land this bigger job. That's a good way to look at factoring, to get upfront working capital, have that cash on hand to be able to do those different things.
Perfect. Thanks, guys.
Okay. We have a couple of questions in the Q&A. What about individual truckers with net 45 and net 60 accounts? FYI, too many truckers have misconceptions about factoring because they feel it's unfair, but those are the ones I move away from.
Yeah, and I'll take this because I can sum this up real quick, is that truckers are always funny because they say factors are terrible, they rip us off, so on and so forth. But yet they'll go ahead and do a quick pay with the broker. And a quick pay, for anybody that doesn't know, is when they pick up a load from a broker and the broker says, this load's $1,000, but when you drop that load, I'll pay you $970, which is 3% the next day. So the trucker comes back and says, I'm not factoring, you guys are crooks, I use quick pays. Okay, it's the exact same thing. Except with us, you would get set up, let's just say you're at 2%. That's on every load they want to factor. So they don't have to pick and choose, because I've got some customers that I speak with, they're like, yeah, I've been limited. I can only haul for brokers that are offering quick pays. Well, why would you not factor? You're going to pay 3, 4, and 5% to a quick pay. I can get you set up at 2.5%, which is less than all of that, and you can use any broker you want to use. So that's kind of the misconception about factoring. And the other thing that I can bring to the table with that is, and I keep on touching on it, We're a bank, so we are held to a much higher standard. Yes, early on, 20 years ago, there were a lot of scummy companies because it's an unregulated industry. So even though we are playing in an unregulated field, we are regulated. We are bank employees. We are regulated by the FDIC. So we get audited from the federal government. They come in and they actually go through our files and they will look for inconsistencies in our files and our underwriting process. Traditional factoring companies don't do that. And I mean, I can turn the coin to the, flip the coin over and say, that's kind of was the downfall with the MCA industries. There were some good ones, and then there were some that came in that just really ruined it for everybody else. And Rob, I don't know if you have anything else. Okay.
Other than that, it looks like we have some requests for instructions on how to do deal submissions, and I'll send you guys the list of all the attendees who've registered, so you could email that to them.
Sure.
And I think that is.
And just so you know, to go to that point, where we are similar to the MCA is we are not gathering 5 years of tax returns and getting blood samples and everything else. I mean, we're funding deals off of, AR, AP, a couple months of bank statements, an application, driver's license articles, stuff like that. We are not, it's not a long in-depth underwrite. We could get a deal in the morning and we could actually fund it the next day. So I want to be very, very clear on that. It's not like an SBA loan. It's not like refinancing a building, so on and so forth.
Great. Well, thanks to all the participants, especially our valued funding source member and gold sponsor, Gulf Coast Business Credit. Thanks for a great job, you guys. We invite everyone to meet with Gulf Coast Business Credit in person at our Commercial Financing Expo coming up this September in Las Vegas. And thanks again for joining us, and have a great day.
Thank you so much.
Thank you. See you guys in September.